For more on finance, we're joined by Rod North, Executive Director at Bourse Communications. Rod, good morning.
Good morning.
So what's happening out there?
Well, we're seeing some pretty good news still coming out of the US with their job numbers on Friday, adding 175,000 jobs and keeping the unemployment rate at 7.6%. So the trend in the US is down. But with the job ads that came out yesterday in Australia, we saw a bit of a decline there, which showed 1.9% decline. But annually, it's about a 19% decline. But it's a very significant long-term trend decline in those job ads. And they generally give you a bit of an indication in terms of what's there for print and on the internet. But I think the thing to sort of focus on particularly is WA, where we saw a year-on-year decline of 50% in ads. So I suppose that's not to be unexpected, given that the resource sector has come off, quite significantly. So you'd expect that the amount of jobs available in that sector, would have declined. But this is usually a bit of an indication of what we could expect when the ABS employment data comes out on Thursday. The current rate of 5.5%.
Would one follow the other, and could we expect an increase, therefore, in the jobs growth?
Quite possibly. I mean, we have seen before where, similar data has come out just ahead of the employment data, and the employment rate has, stayed at the current level. But I think I'd probably, from looking at, other sort of data I've had a look at, I think we could see that rate up to 5.6% this week. And there's still quite a bit of concern, in the marketplace that, with uncertainty on a whole range of levels, and with uncertainty about the government and when the election's going to be, I think a lot of people are still putting employment on hold. I know from a lot of businesses' point of views, they might want to employ people, but they're really waiting, to see where certainty can sort of come with an outcome for an election and so forth.
So now we're being told the Australian dollar is, for sure going to drop down to 70 and stay low for a while. These are the same people who were telling me that the dollar was going to be at above parity for a decade.
Well, that's exactly
Why should I
right.
believe these people?
Well, I think probably you've got to take a bit of a contrary view. I mean, the thing is, no one ever puts a time limit on it. I think a lot of people were saying they thought that the dollar would still be sort of 95 to $1 by the end of the year. But I think realistically...
Some currency forecasters were saying with absolute certainty it would stay above parity for a decade.
Well, that's right. Well, I mean, certainly with the US recovering, and I think this is one thing that we have talked about a lot on this show, the more the US economy recovers and the lower the unemployment rate goes there, eventually the rates in the US will have to go up, and when they go up, our dollar will go down. So I think there is some expectation over the next 12 months to 2 years that we will see our dollar back in that sort of 80 range, but my view would be that I think the dollar will stay around 90 cents for probably the rest of this year.
You're prepared to take that prediction?
I trust Rod, yes I do. He's
believe anyone
been
anymore.
right in the past on interest rates and this and that. So.
OK, anything else we need to look out for in the next couple of days?
Well, I think you'll probably see a better market today. Wall Street, up again on sort of pretty positive data sort of coming out of there. So I think we'll probably see a 20 to 30% increase in the market today. And of course, we saw the ABC former chairman, Maurice Newman, join Tiger Air. So that was interesting appointment. Virgin's obviously, spreading its wings even further and looking to take on the world by the look of it, the way they're going.
Good to see you, Rod. Thanks so much.
Very much.
Thank you.